Hey everyone, welcome back to Corporate Dakota, the place where we dissect the secrets hidden within company financial reports, getting you the real story behind the numbers. Today we are diving deep into Materion Corporation's annual report for 2025, and let me tell you there are some interesting things hiding in these pages. Make sure you are subscribed and join our Discord community linked in the description below for even more exclusive content and discussions. Materion Corporation, an integrated producer of high-performance advanced engineered materials, is bringing in some serious revenue. In 2025, they hit $1.8 billion in net sales. That is a huge number and shows they are playing in the big leagues. They serve a ton of important industries from semiconductors to aerospace, so understanding their financial health is key to understanding a part of our modern economy. $1,786,550, $1,684,739, $1,665,187. Looking at their financial tables, we see that their net sales in 2025 were $1.8 billion, which is up from $1.7 billion in 2024. This is a good sign showing growth. However, when we look at value added sales, which strips out metal costs, we see a slight decrease year over year. This hints that much of the sales increase came from just the price of metals going up, not necessarily more products being sold. 1,046,194, 1,097,577, 1,127,071. Their value added sales actually went down by about $51 million in 2025 compared to 2024. This means fewer core products were sold. They attribute some of this to a quality issue with a precision clad strip customer and the divestiture of a business in Albuquerque. This is a bit of a red flag. While overall sales are up, the core business volume is down. 308,626, 325,985, 349,042 gross margin. Also saw a dip in 2025, dropping to $308 million compared to $326 million in 2024. When you look at it as a percentage of net sales, it fell from 19% to 17%, and as a percentage of value-added sales, it dropped from 30% to 29%. This indicates they are making less profit on each dollar of their core products, especially with that quality issue costing them around $27 million. 109,796, 47,223, 136,444. Now here is where things get really interesting. Even with lower gross margins, their operating profit in 2025 jumped significantly to $110 million, up from just $47 million in 2024. How is this possible? Well, in 2024, they had a massive goodwill impairment charge of $56 million and a long-lived asset impairment of $17 million. Basically, they wrote off a huge chunk of value from past acquisitions, especially in their precision optics segment. By removing those one-time big hits, their operating profit looks much better in 2025. It shows that excluding those historical issues, the underlying operational performance improved. 74,823, 5,888, 95,702. And their net income reflects this, bouncing back strongly to $75 million in 2025 from a very low $6 million in 2024. So while 2024 was a tough year due to those impairment charges, 2025 shows a clear recovery in profitability. 103,243, 87,817, 144,414. Their cash flow from operations looks healthy and improved in 2025 to over $103 million, up from $87 million the year before. This is largely due to better management of their payables and a slight increase in inventory holding. Performance Materials, Electronic Materials, Precision Optics. Let's break down their segments. Performance Materials saw its net sales drop by 9% in 2025. This was hit by lower volumes in consumer electronics and aerospace and defense, largely due to that quality issue we talked about earlier impacting their sales significantly. Electronic Materials, however, saw a substantial 19% increase in net sales driven by higher precious metal pass-through costs and increased volumes in semiconductors. Precision Optics also grew its net sales, showing they are recovering. Now, every company has risks and Materion is no exception. They are heavily reliant on the semiconductor industry, which is known for its boom and bust cycles. Rapid technological changes are another big concern, meaning they constantly need to innovate or risk becoming obsolete. Then there is the constant challenge of raw material availability and price fluctuations, especially for precious metals. The price of gold, silver, and platinum can swing wildly, and this directly impacts their costs and profitability, even though they try to pass these costs on. They also mention a cybersecurity incident could severely impact their business. A portion of our revenue is derived from the sale of defense-related products through various contracts and subcontracts. These contracts may be suspended, cancelled, or delayed, which could have an adverse impact on our revenues. Their defense contracts are a notable revenue stream, but these can be cancelled or delayed, which adds another layer of uncertainty. With global conflicts and changing government budgets, this is a risk they actively manage. Materion operates the world's largest bertrandite ore mine in Utah. This mine provides a key ingredient for their beryllium products. It is crucial to their supply chain, and they have significant mineral reserves. This mine ownership gives them a unique competitive advantage in their performance materials segment. One fascinating aspect is their use of consignment inventory for precious metals. This helps them manage price volatility, but auditing it is complex. They have to rely on estimates of metal content in various refinement stages, which can lead to adjustments that impact earnings. This is quite a unique accounting challenge. And as we saw with those impairment charges in 2024, their accounting for goodwill and intangible assets is quite dynamic. They must assess these assets annually for impairment, meaning if an acquisition doesn't perform as expected, they have to write down its value. This underscores the risk involved in their growth through acquisition strategy. Their stock-based compensation expense is also noteworthy. In 2025, it was $11.2 million impacting SG&A costs. This is a significant cost aimed at retaining key talent through awards like stock appreciation rights and restricted stock units. It shows a commitment to rewarding their employees, but also a direct cost on their earnings. So what is the big picture for Materion? They show a resilient recovery in 2025 after a challenging 2024 marked by significant impairment charges. Their core business volume in value-added sales saw a dip, which is concerning, and they are facing operational headwinds with that quality issue impacting their performance materials segment. The electronic materials segment is showing strength though, driven by semiconductor demand, and that acquisition in South Korea seems promising for regional growth. Risks around market cycles, technological shifts, and raw material prices remain ever present. Overall, Materion navigated a complex year. The operational improvements and the absence of those massive impairment charges in 2025 led to a strong rebound in net income. However, the slight dip in value-added sales and the quality issue are important areas to watch. Their strategic focus on innovation and diversification across key industries should serve them well, but they need to ensure their core product volumes pick up and quality issues are fully resolved. Alright, that is our deep dive into Materion's 2025 annual report. What are your thoughts on their recovery and the risks they face going forward? Let me know in the comments below. If you found this breakdown helpful, hit that like button and subscribe for more corporate deconstructions. And don't forget to join our growing Discord community for live discussions and exclusive content linked below. Thanks for watching, and see you next time on Corporate Decoder.